Okay, traders, so before we dive into actually back testing specifically the pullback strategy on a couple of different pairs together, we need a way to record that data, right? I'm not sure if you already have a spreadsheet that you use currently, and if you're brand new to trading, then I would assume that you do not. So in that case, there is a link below these videos that will allow you to download this spreadsheet. This spreadsheet's available to you if you're a part of the EAP training program. Something that's also available is something called the Spreadsheet Mastery course. This is a course I created that will teach you how to create all of this spreadsheet, meaning it will teach you the formulas involved in each of these and how to create a spreadsheet that looks exactly like this one. This current spreadsheet we're on is a one target spreadsheet that is capable of doing some pretty cool stuff, and I'm gonna go ahead and share with you guys what that stuff is. So let's go ahead and go through how we use this spreadsheet in our back testing. So what we would do is record our trades, right? We have, let's say we're trading on the euro dollar and we're trading at 1 o'clock p.m. Let's say that we're doing this at the beginning of 2018 and the trade was a 20 pip win. So if a trade was a 20 pip win here for the euro dollar trade we're talking about, this example, the stop loss would be 20. Always do the stop loss in a positive number. What we're doing is recording the stop loss that we have for each trade as a positive number, and then where it says position 1, this is your target. If you won the trade, we will do a positive 20 pips if we have a one-to-one risk reward. If you lost the trade, you'll do a negative 20 pips. So let's say we lose this trade. We would put negative 20, and once I hit enter, you'll see that all the other cells automatically are filled. So if I hit enter there, you'll see that our account cash went from 10,000 to 9,800. We were risking 2%, right here's our risk per position, of a $10,000 account, meaning we were risking $200, bringing our drawdown to 2% and our percent gain loss to 2%. So as you can see, everything automatically gets filled. I'll type in one more trade and then we'll go through in detail what everything in this spreadsheet will show you. Let's go ahead and type in another trade on the euro dollar. Let's do this one at 5 o'clock p.m. Let's do it the next day. And let's say that it was a win instead of a loss of 20 pips. So now that we have those two recorded, we can actually talk about this. Here, starting from the left, you can see that we have our average win in pips. So what this is going to give you is every time you win a trade, the amount of pips you won based on your stop loss and target that you plug in. You also have an average loss, which will give you your average risk reward. Obviously, we've had a 20 pip win and a 20 pip loss. We have a one-to-one risk reward so far using this strategy based on this spreadsheet calculations. We have a total win in pips, which is going to be 0 because we lost 20 and then gained 20. We have two total trades with one win, one loss, giving us a 50% winning percentage. And all of these calculations, guys, are done for you. You don't have to do any of this. The only things you'll have to type in for this spreadsheet is over here. You just need to type in the pair, time, date, your stop loss in a positive number, and your position 1, either a negative number or a positive number, whether or not you won the trade. Now, also what we have is an adjustable starting balance. Now, to show you guys an example of that, here, as you can see, this is starting with a $10,000 account, but let's say you're going to start with less or more. Let's say you're starting with 1,000. All you'd have to do is adjust that number, and all of the cells will automatically adjust to that starting balance. As you can see now, instead of losing 200, we lost 20 on that trade, still risking 2%, but risking 2% now on a $1,000 account, which would be a $20 risk. And that can be adjusted to any size account that you have. We'll keep that at 10,000 for now. We also have an adjustable risk per position. So each time you place a trade, you'll want to risk a certain percentage of your account. And this column will help you to determine your risk management plan based around your risk tolerance. So we can change this number to 1%. We can do a fraction of a percent for our risk, but for now we're going to keep it at 2%. Now, also in this column here, you can see your total cash gain or loss. Here you can see your total percentage gain or loss. And finally, at the end here to the right, you can see your max drawdown. So that's what this spreadsheet is capable of telling you. And all of this information is going to be essential throughout your backtesting process in order to come up with a money management and risk management plan. So that's what this spreadsheet is meant to help you do, along with help you record the trades you take in your backtesting or record the trades you take in live trading to give you a better look at how your strategy is performing. Now I'm going to go ahead and paste in a few more trades just to give you guys a better overview of what this spreadsheet can do. All right, guys, so I've got those pasted in now, and as you can see, we have about 20 trades. Looking over here, here's the number of trades we have. We have 20 trades that have been recorded here, and now you can see that we have a 50% winning percentage, around a 1.5 risk reward. bringing our $10,000 account up by $975 or 9.76% with a max drawdown of 3.9%. So this is all, as I said before, essential information, and all you have to do to get this information is plug in your trades, your stop loss in pips as a positive number, your target in pips as a positive or negative number, depending on whether you won or lost the trade. And then the spreadsheet will automatically give you the amount of money per trade that you gained or lost. It'll automatically give you the total of pips gained or lost in the account. It'll automatically give you the total amount of cash in the account per trade, automatically also give you your percentage gained or lost per trade in this column, and your percentage drawdown per trade in the final column. So again, go ahead and download this spreadsheet if you don't have a spreadsheet for keeping up with your trades yet, because we will be using this spreadsheet in the next couple of videos. Also, I would suggest going over to spreadsheetmasterycourse.com and checking out how this spreadsheet is actually made. I think that's an essential part to success, is understanding everything you're working with. So if you're interested in that, there's also a link below the video labeled Spreadsheet Mastery Course. All right, guys, so now you should have a pretty good comprehension of how the spreadsheet works. In the next video, we'll be using it to backtest a couple of pairs using the pullback strategy together. I'll see you guys in that next video. All right, guys, so here we are on the Aussie dollar chart, and I'm going to go through this pair a bit faster without actually explaining everything. You should already have a pretty good grasp on how to backtest this. We'll run through this pair really quickly and then plug it into the spreadsheet as well. I'll show you guys how to actually sort a spreadsheet throughout this video, and then we'll take a look at what these two combined would have produced over the year of 2018 so far based on the pullback strategies. So let's go ahead and jump into the backtest here on the Aussie dollar. As I said, I'm going to be going through this video much faster than the last one, so just bear with me and stay tuned as we go through the charts here on the Aussie dollar and look for our entry reasons. Again, the best way to backtest is with market replay. So we go ahead and grab our replay tool, put it on 1/1 of 2018. That gives us absolutely no data looking to the right. We'll click our play button and watch the candles as they come. Pause the video if we see something. There is a possible entry, so we'll wait and see how this plays out. We would have a entry here. At the close of this green candle, we would have a stop loss right under here, a target up here. Let's see how that plays out. All right, looks as though we would have been stopped out on that trade. We'll take a red arrow, bring it in, put it right there. We'll go ahead and hit play. That right there is going to be an entry. Let's zoom in and make sure that previous candle is actually red. As you can see, this previous candle is red. We have our 1, 2, 3 engulfing pattern right here. So that's our advanced entry on the 50 EMA, giving us an entry reason number 2. Let's see if that plays out. Our stop loss will be right down here after the entry here, target right up here. Hit play and see how that plays out. And that looks like it would have been a win. We'll go ahead and put a green arrow there. And that entry candle is there. Hit play, continue to look for these entries. There's another entry right here. We have more than a 2 candle pullback after the creation of new highs. We have a 1, 2, 3 advanced engulfing entry right there on the entry. Stop under here. Target probably right above this previous candle that we just got to see. Let's go ahead and click play. And targets would have been hit on that trade. We'll go ahead and put a green arrow there. And continue looking for our entry here on the Aussie dollar. Right here's an entry. The reason that's an entry is because we did just make new highs from our previous high. We also have a 2 candle pullback plus our 1, 2, 3 engulfing advanced entry. See where that trade goes. Stop loss would have been under here. Target probably back up here at these highs. See if the market makes it there. Yes, it does. We would go ahead and put a green arrow there. Click play again. Continue looking here on the Aussie dollar. Here's another entry right here. The reason that's an entry, we have new highs. We pull back by more than 2 candles and we get our 1, 2, 3 engulfing candle, advanced engulfing entry right there. Stop loss would have been right down here up under where the market's been. Target probably right up here above 0.804. Let's see how that plays out. Looks as though we would have hit targets on that. We'll go ahead and mark that with a green arrow. Now we're still waiting on a bullish entry, guys. Right here is a bullish entry. We have a new high created here. We have a more than 2 candle pullback. We have a swing low engulfing candle. Now this is one of the more subjective entries. This is really just a doji. I probably would not have entered on this specific trade, but for the rules-based system, for actually following the rules to a T, the rules are met here. This candle body is bigger than the previous candle body, but the fact of the matter is this is a doji, so there is a very small amount of subjectivity here. That probably would not have been an entry, but we're going to count it anyway on this back test just to follow the rules completely and to a T. And the more experience you have, the better you'll be able to locate situations like this and decide whether or not to place your entry. As you can see, that was in fact a losing trade. Now we have another entry. After our loss, what can we wait for? A pullback that touches the 50 EMA. This candle ended up touching the 50 EMA here. So what we're doing is looking for targets up here somewhere. We'll see if that actually happens or not. And it did not. We ended up losing that trade. Place that right there. Click the play button. There's an entry. We have a market pushing down into new lows, breaking below the 50 EMA. 1, 2, 3, engulfing entry right here. Let's click play and see if that worked out. And yes, it did. Green arrow here. We'll continue here on the Aussie dollar. We may just do a couple more trades here on this pair. Hopefully by now you're really starting to understand and comprehend how to backtest this strategy. So we'll probably look at a couple more trades here, and then I'll go ahead and do the entire backtest without recording it because I don't want this video to get as long as the last one. Then I'll show you guys how to combine different pairs in the spreadsheet, and we'll take a look at the spreadsheet with the Aussie dollar and Canada Swiss inside of it for 2018 to see how it performs. So let's go ahead and look at just a couple more trades here. All right, there's an entry, guys, right here. We have our 1, 2, 3 engulfing pattern, our advanced entry under the 50 EMA after the market breaks into new lows. So that's going to be an entry right here. Stop loss right up here, target breaking into new lows. Let's see what happens. Looks as though this ended up being stopped out. We'll go ahead and place a red arrow there. We've now touched the 50 EMA, went lower. We didn't get any kind of entry. Now we have an entry right here, the close of this candle. We have a new high breaking above the 50 EMA, 2 candle pullback, and the engulfing candle. This is an advanced entry with our 1, 2, 3 engulfing move. Let's see if it makes higher highs. We in fact do there for a second, but it doesn't look like that would have hit targets quite yet, and looks as though at this point we would have been stopped out there, so that would have been a loss. All right, guys, so what I'm going to do is go ahead and test the rest of this data here on 2018, plug that into a spreadsheet for you, and we'll take a look at that combined data. We'll also take a look at how to combine data in a spreadsheet and put it correctly formatted by the date. So what you want to have in a backtesting spreadsheet is the correct date and time for each trade. That way you can put them in order and see how the strategy actually performed in the same way as if you were to actually place the trades. We'll talk a little more about that when we hit the spreadsheet. We're heading over there now, so I'll see you guys over there. Okay, guys, so here we are on the spreadsheet, back on the spreadsheet. Now we have combined data. We have the Aussie dollar here at the bottom. We have the Canada Swiss at the top, and we have all of our numbers still, right? We have our average pips won and lost, our total pips, our total trades, our winning percentage. We have everything we need except our drawdown and our percentage gain. While our percentage gain will probably stay the same, the drawdown is going to change. Let me tell you why it's going to change. In the spreadsheet, we have all these numbers plugged in, right? We have the Canada Swiss and the Aussie dollar numbers plugged in, but the problem is they're not in the correct order when it comes to date. When it comes to date and time the trades were placed, they're not in the order they would be as if we were to trade them live. And why is that the case? Well, it's because we tested the Canada Swiss and then the Aussie dollar. If you'll look here, we have 1.718. And then we have 1.1118. Well, in reality, if we were actually trading this strategy on these two pairs, 1.718 would have been directly followed by 1.918, not by 1.1118. So that's why the drawdown is actually calculated by the order the trades are in. So that's why we have to actually go through and plug these trades in with the correct date. And the easiest way to do that is to open up a brand new spreadsheet. You can do so at the top left. You can see where I'm at. I'll go ahead and point that out for you guys. Right up here is where I'm looking at the top left. You can go there and just click new. So once you have that, we'll minimize that for now. We're going to take and copy just from the pair over to position 1. We're going to copy that all the way down to the last trade we recorded. Copy. We'll open back up that brand new spreadsheet, and now we'll go ahead and paste that in. So now we have all of our trades pasted in here. What do we do next? Well, here's our date, the date for our trades. What we need to do is click the column that the date of our trades is in, just a whole column, meaning click C if the date of your trades is in C. Click C. C will highlight that entire column, and we need to sort these ascending, meaning sorting them from least to greatest. So what we're going to do is go up here to the sort tabs, and I'll point these out for you too. on the Office program I use, they are right here. And what we have to do is sort them. So in order to do that, we just click that button right up here and then click extend selection. And what that's going to do is sort them correctly. Now, this is exactly what we needed. Now we have 1.5 followed by 1.7 followed by 1.9, 1.11. As you can see, they're sorted correctly by the date the trade was placed. If you want to get the blue and white back to the correct order, all you have to do is take the top two, click the paintbrush or the clone formatting tool, and drag that all the way down. Once you have that done, everything should be correct yet again. So now we will take this new information we have, and I know I'm going quite fast, guys, but rewatch this if you have to. This information is now correct, meaning it's sorted by date. It's all in the correct color scheme that we had before, and it's ready to go back in the spreadsheet so we can calculate our backtesting results correctly based on date. Now we just have to copy it out of the new spreadsheet we just made. We can minimize that now. We'll take and paste this information in right here. So now we have it pasted in. Now we actually have our drawdown. We have the correct everything in our spreadsheet based on those two pairs. And this is the exact process you'll go through, whether you test 2 pairs in 30 or 40 trades or 5 pairs in 500 to 1,000 trades. It's going to be the same exact process. So this is just me showing you guys how to sort the information correctly by date inside of a spreadsheet. And this is how you would do that. As you can see now, our drawdown has changed a little. We had a 5.8% drawdown, I believe, last time, and now we have a 4.08% drawdown. The reason we changed that is because we changed the order of the trades to the correct order based by date. Again, I know that was quite fast, guys, but I wanted to get through that pretty quickly. It's not a very difficult concept to comprehend, but if you did have trouble, make sure you just go back, rewatch the video, and I'm sure after a couple of times, it'll start to make sense to you. But now we have the Canada Swiss and the Aussie dollar. You can see that we have a 74% winning percentage. So the Aussie dollar performed a little bit worse than the Canada Swiss, still performing at a decent rate and managing to give us over a 34% return so far in 2018 using just these two pairs. Next up, I'm going to plug in another one of my favorite pairs into the spreadsheet in the next video. I'm going to show you guys how to optimize the spreadsheet. We'll go over sorting it again, and then we'll go over optimizing the spreadsheet for the best pairs to trade in your portfolio. So at this point, guys, you have everything you need to start backtesting on your own, putting those numbers into a spreadsheet, and then the next video will show how to sort those numbers by date correctly again, as we just did in this video. Plus, we'll go over how to actually optimize the things you need to look for when optimizing for having the best pairs in your portfolio for the specific strategy that you're trading. So again, 2 of my favorite pairs, and this is not me telling you not to backtest these. It's actually essential that you still backtest them even though you know I trade them. Yes, I trade the Aussie dollar and the Canada Swiss with this strategy. Do not take my word for it that these strategies perform well over time. As we said in the beginning of the course, if you choose not to backtest yourself, you're shooting yourself in the foot when it comes to your trading success. I think your likelihood falls dramatically. Your likelihood of being successful at trading falls an insane amount if you decide not to backtest yourself. So although I'm telling you the Canada Swiss and the Aussie dollar are some of my favorite pairs to trade this with, do not take my word for it. Make sure to test these 2 plus other pairs on your own. But having that information, you can start with the Aussie dollar and the Canada Swiss plus the other pair we're going to discuss in the next video. I'll see you guys in that next video. We'll talk about optimizing your strategy, optimizing the pairs you trade, and overall making this strategy even better. See you guys there.